Hey everyone, welcome to the live stream. It is Saturday. It's nice to have a Saturday. And I don't know about you guys, but I finished my taxes, sent them in. Did I send them in last Saturday? I had them done for a little while and got them in. So I paid my tax bill and had that behind me. So weekends are a little bit of an open space for me. It's nice to have a nice open Saturday. And I thought I'd do a quick live stream just to check in because I am not going to be able to stream tomorrow. And I canceled the member call tomorrow since it is going to be Easter. Thought I'd just cancel that one. And then we will reconvene later on. So this will be the live stream for the weekend. The markets have been super exciting in 2025. And I can't say that they've been exciting in a good way sometimes. We've had an extreme sell-off. We had that week, April 2nd. Geez, man, we went down fast over just a couple of trading days. We went down 13%. I think that caught a lot of attention. It really scared people. It scared me. That was a big sell-off. And we are up from those highs, but I don't know that we have a big rally underway. I think we've got plenty of concerns out there to be keep an eye on. But we'll see how these earnings are coming up are going to influence stock prices. Big earnings are coming this week. That's going to be the big mover of the markets. And we've got big companies announcing. So that's going to really take much of my attention. As you see live streams and videos come out, it'll predominantly be a reflection of the earnings that are going to be announced. So got an exciting week ahead. We had some things happen here this past week that were also interesting. For today's stream, I've got a few topics and one stock that I had in mind, and I wanted to take a look at some super investor activity as well, including, I believe, Bill Ackman had his portfolio updated. I haven't touched his portfolio that I'm tracking, so I thought we could do that on the live stream. Now, if you're a member of the channel and you would like a stock review, put in the chat and I will cover it. If you're not a member, don't want to be a member, you just want to pay by the drink, so to speak, you can buy a super chat for $5 and I will review a stock. And if you want a volume discount, you can buy 3 stock reviews for $10. What a deal. The best deal on the internet for stock reviews. And I'll do a full intrinsic analysis looking at cash flows of those companies, unless it's a bank or a real estate investment trust. We'll go through a different path for those companies because you don't use free cash flows to value those types of businesses. So take a look at the list of stocks that you would like to take a look at. If there's one there, if you're a member, pop it in there. If you're not a member, buy that super chat and I'll review your stock. So let's get into a couple of topics I wanted to cover to set the table, and then we'll get into a stock that I wanted to review, and then we'll go to super investors. So, the leading sector year to date right now is materials, and that continues to be the case. It's a combination of, I think, the tariffs and inflation. As commodity prices for materials stay high, these certain businesses are going to make a lot of money because they're just getting paid a higher price for the commodity. So that looks really, really interesting. I've been buying into a couple material stocks and trying to build right now it's a small, tiny position, but I'm trying to build that up a little bit because I think it's going to keep working. If we have a tariff war and we see inflation continue, I think material companies are going to do okay. Consumer staples are up there, and then utilities. So investors are moving to safe stocks in the case of consumer staples and utilities. Financials is just barely in the red, as well as healthcare. As it comes to technology, that's where I think a lot of the correction is taking place. And really it was needed, right? We had some stocks that were really, really expensive. They've gotten way too expensive, got way ahead of their valuations. And I continue to see more and more companies be discounted. And that's a good thing. When we can find good businesses, we can buy, hold for a long time and have a good price to buy those businesses with. So that's really good. The exception being like a Netflix, which I did a video on today. I believe that stock continues to be too expensive. It's really done well, but there is such thing as a really good business being priced way too high. In the case of Netflix, I think that's the case. You can see more details on that video I released. All right, so that's what's going on with the sectors, big picture. Now let's get into the stock that I wanted to take a look at. So Taiwan Semiconductor. So Taiwan Semiconductor is it's the foundry. Semiconductors are produced in a foundry, and this particular foundry is the biggest one in the world. This is where NVIDIA goes to have their chips produced, as well as like Broadcom goes to TSM. Their primary operations are in Taiwan, although they're building operations in the Phoenix, Arizona area here in the United States. And that's going to give them onshore presence for the US market. So it's also politically a good thing if they can show that, hey, they're investing in the US and they're going to create US based jobs and so forth. So those things are good for the company. Now, this stock has flourished over the 5-year. It's up 189%. You can see that it really flourished a couple of years ago. Then it kind of had a plateau, and then it came down in the year 2022, along with a lot of other stocks. But since then, the stock's really worked, especially in the course of about a year. It really went up. I was a stock investor in TSM for a long time, going back, maybe to 2018 or so. And I saw a really nice run up of the stock. I think I tripled my money on the stock, and then I got out of the stock. Good business, good growth, but I just thought that the stock price had gotten too high. And I got out at a good time. I don't think the stock did much for a couple of years, but more recently it started to really do well. Now, I was very cautious with semiconductor a couple of years ago when it started this huge rise. And TSM, especially in the beginning, their fundamentals didn't look all that great, but they continue to get better and better. And we're going to take a look at those in a bit. And more recently, this stock has really come down. It's down 23% year to date, really hit a peak a couple months ago, and it's been selling off. They had fairly good announcement of earnings, and I think they announced in the morning on Thursday. And they're in Taiwan, so they announced kind of in the middle of the night for the US. And their stock didn't really move, which is interesting. It only moved like up 0.1%, and then in the after hours trading, it's up 0.2%. Meanwhile, NVIDIA has really been selling off. So the whole semiconductor space is a little iffy. I'm trying to be really careful in semiconductor. I'm not a big investor right now. I am buying into a couple of stocks. TSM's not one of them. This is a big cap stock. Now, this is in US dollars, $675 billion market cap. And in revenue is $94 billion. So it's not too expensive if you compare the stock price to their sales. It's less than 10. We're probably at a 6.5, price to sales on the stock, which isn't too bad. The PE ratio also doesn't look overly expensive, 17 the current year and then 13.79 for the future year. And analysts believe it is a strong buy and it's really discounted. When we look at these numbers, now these are going to be in the Taiwanese currency. So keep that in mind. I'm just going to show growth percentages, and then we'll get to US dollar-based metrics. The company did expand, and I'm looking at the annual. This is trailing 12 months. For the full year 2024, they grew at 33.89. That's very good growth. They had a contracting year in 2023. So semiconductor tends to be cyclical. You have periods of growth and then some periods of contraction. and that's what's showing up there. This business here, it looks like they're really growing. The most recent quarter, the growth is really good. So what's interesting is other semiconductor companies like NVIDIA is really selling off. And I think because the stock was just too high and a lot of the future positive expectations were priced into the stock. And now that reality is kind of settling in, we have a tariff war. You have news stories like NVIDIA not being allowed to sell chips to China. That's really bringing down the price of the stock. So that's what I think the semiconductor space is dealing with. Meanwhile, TSM is showing really good growth. So that's interesting. Looking at TSM's free cash flow, they have very good free cash flow, $28 billion of free cash. And they have very good growth. Now, if I look at $28 billion of free cash and I multiplied it times 10, I get 280 billion. Multiply it times 20, I get 560 billion. And that's where I would probably land the valuation of TSM is around 20 times free cash flow. And it would get to 560 billion, but the market cap of the company is 675. So this stock is a little expensive. Let me see if I've got a valuation on TSM. And I don't have it because I haven't been tracking that stock in a little while, just because I think the stock price is just too expensive. I think the stock can come down to $500 billion market cap, $400 billion market cap. It certainly was there not too long ago. I mean, the stock a couple of years ago was well below $100 a share. And I think they could probably get back down to $100, maybe $80 a share, because the stock price of TSM really advanced. It went up on the whole story of AI and how AI is going to need far more data center builds, which is very possible. But in order to do so, and for TSM to reach the valuation they're at from a fundamental perspective, they're going to have to grow at these rates for a long time. And that just doesn't happen all that often. You see the growth in 2018, and that was a decent economy, only 5%. 2019, decent economy, only 3%. And then we saw higher growth rates, but then a contracting year. So that's what I think is going to eventually bring the stock price down, is once they show that, hey, we're not going to grow that quickly anymore. We might have a down quarter with negative growth. That's when the TSM stockholder is going to be hit. So TSM was a big name this past week. The other big story, and I don't know how others feel about it, is I always feel there's a sense of uncertainty with Taiwanese companies. I have nothing against TSM nor, Taiwanese companies, but there is a little bit of tension with China. China believes Taiwan is part of China, and it seems like they may eventually want to take it over. What's going to happen to Taiwanese-based publicly traded companies? Is that a threat? Would they start limiting the production of chips to the U.S.? Is that a risk factor? Now, that might be remote, but to me, it's a real risk factor. One that, if you're buying a U.S.-based company, it's you don't have the same risk as buying a Taiwanese company that could be in the middle of some type of geopolitical event where China takes over Taiwan. That would be huge, huge news. That would bring down the stock market overall, but it would in particular bring down TSM stock down substantially if China made a move on Taiwan. So we will see how that plays out, but that is another risk factor that I put on TSM. So that is TSM. So check in the chat. Sergio, very good to see you. Shadow Guy, great to see you. So when you live abroad, you get an automatic 2-month extension to file taxes, but you still have to pay by April 15th. Oh, that's cool. Convenient. Sergio, good to see you. You want to talk about Pfizer? Well, if you buy a super chat for $5, I could take a look at Pfizer. Anthony Ferguson, how you doing, man? Good to see you. Zerblurg, Google. Yeah, I can analyze Google. If you want to buy a super chat, glad to do that. Then Anthony. Yep. More comments on Google. Yep. Cool. Thanks for the comments, guys. So I wanted to take a look at, I try to keep up with super investors because it's interesting to see what they're doing. And I think that Bill Ackman updated his, they have to report their portfolios to the SEC in the form of 13F reports. And I believe he reported his report. So I wanted to take a look at what he did, what changed, and then maybe on the fly here, we can update his portfolio on the portfolio that I'm tracking for him. So his biggest position is Google Alphabet. I think that's the biggest dollar amounts. Close to it, yeah. Then he has Brookfield. I think a new investment is Hertz, and he made a splash. I think I first read it from Shadow Guy, who put it on the Discord. So Hertz is the rental car company. They are in a lot of financial trouble, I would say. So he bought into that company. It looks like, let's see, portfolio. I'll double check the shares that he owns with the portfolio I'm tracking, but I know that's a new position. The other one that I'm not seeing is I thought he bought into Uber. So I'm not seeing that here. And it looks like he sold some Seaport, but I think he's also in Uber. And that's a more recent position. All right, so I'm going to move this guy to another screen, and I'm going to open up the portfolio that I have for Ackman. So it looks like so Brookfield, the share count did not change. That one stayed the same. And then when we go to the Googles on GOOG, that share count did not change. And then GOOGL, that didn't change either. Canadian Pacific, the railroad company, that stayed the same. Chipotle, did that change at all? Let's see here. That stayed the same. And then Hertz is a new one. Okay, so we can add Hertz to the mix. Oh, got the symbol wrong. And Hertz, the one thing I would say is if they have a lot of used cars, which they do because they rent cars, that might be a really smart move because I think car prices are going to go up. With tariffs, it's going to make them more valuable because new cars are going to go up in price. So used cars, I think, are going to get a bump in value. That's where my logic takes me. All right, so that's the share count. reported price that he paid for those shares, according to this website, is $3.66. And the value is 46 million. So the price I'm going to track is the acquired price. That's going to be $3.66. And the current price, I think this will update automatically. Yeah, it was a big run up on the stock because when he announced it, it's such a small cap and a risky stock that he's already sitting on a big gain for Hertz. He's a big name going into a small cap. Let's take a look at Hertz after I get done updating this. And he really did make a splash there. So continuing on, so Hilton. I'm going to update this guy just so that we have a note that I'm either taking what was reported at the end of 2024 and just continuing on, or as he changes his portfolio, I'll change it and use the acquired price in the case of Hertz, where he acquired it in the middle of the year. All right, so let me update that guy. So data. Okay, so we've got that going. We updated Hertz. That was the big news. And then Hilton looks like the share count did not change. Howard Hughes, the share count did not change. Nike, that's one of his big bets. That one is not working in his favor. He's down 26% from the beginning of the year. Nike's been hit with those tariffs. It's pretty ugly on how it's going to be impacted. QSR, Restaurant Brands, that is the same share count. And then Seaport, that was at 5 million. Okay, so that stayed the same. Okay, good. So the only real change that was reported was Hertz, and that was a positive. So overall, his portfolio is down 14%, and the S&P is down 10%. So he's still lagging the S&P. Now, the Hertz investment, since it is a small cap, it's really been moving on the news. I mean, it just shot up, and it shot up this past week. So when the news hit the wire, man, it just really took off. It's a small cap, and this is 2.5 billion after the price increase. So if we do a rough calculation, before it really jumped in price, it was at $3.60. So it's gone up maybe 2.5 times. So the market cap was really $1 billion when he got into the stock. And it's really run up because it's such a small cap stock. It really moved it. It is losing money, so we don't have any PEs. Analysts say it's a sell. It's being priced at a premium of 47%. I'm curious to see what they have to say. Let's take a look at the fundamentals. See what kind of business Bill Ackman is buying here. So we know what Hertz does. They rent cars. And I'm curious to see the balance sheet. I think the balance sheet is going to might be the most important financial statement here. So we've got $9 billion of revenue. And the revenue is somewhat stable, right? It's only down 3.44%. Now, the car rental business, right, is being disrupted by ride sharing, Uber, Lyft, that a lot of travelers would prefer to do instead of renting a car. Sometimes when I travel, it's less expensive to take Uber. Once you're done renting the car, paying the gas, and some places I go to, big cities, they charge a lot for parking. You add that parking fee, I'm saving money if I take Uber, and it's more convenient, it's faster. They drop me off at the curb versus when I have to go get the car, return the car. That eats up at least 20 minutes each, upon arrival. And departure is a little quicker, but it still takes maybe 15 minutes of time. So overall, Uber is just eating their market share because it's just more positive experience overall. So that's part of the problem that they have. So their revenue has been contracting a bit. I'm surprised it's not contracting even faster. And they're not losing too much money. That doesn't look too bad. So their operating income doesn't look too bad at all. Are they producing free cash flow? No, they are not. And they haven't produced free cash flow in a while. So it is not a stock that I can value based on free cash flow because for the last 4 years, they haven't produced any free cash flow. The last time, out of the last 8 years, they've only had positive cash flow 1 year. That's really concerning. It's like, what kind of business is one buying here? If they consistently just burn cash 7 out of 8 years, that's got to be really concerning. For an investor like me, I'm out. I don't need businesses like that. I need businesses that produce free cash flow that are going to be more valuable over time. So this is the statement that I wanted to look at. I wanted to focus in on cash and debt. So they have $594 billion of cash. I just mentioned they're burning cash. So that's not a lot of cash. And they have debt of $18.4 billion with a market cap of $2.5 billion. And before Ackman became involved, they were at $1 billion market cap, but they have $18 billion of debt. This company is in a world of hurt when you have that type of debt and you're just not that valuable. Debt to equity looks terrible. And debt to EBITDA, there is no EBITDA right now. It's negative, so you can't calculate it. So this is a really risky move for Bill Ackman. I wonder how quick and he's going to get in and out. That would be interesting to see. You can see the fundamentals are just super risky for Hertz. That $18 billion of debt is ugly. So I would have walked away on the fact that they don't produce cash flow. I would have ran away after seeing the balance sheet. Like, no, thank you. Maybe Bill Ackman's going to pull off a really, really profitable investment. He has super deep pockets. He's not investing his own money. He's investing investor money. I invest my money and I don't want to lose my money. I want to grow my wealth. I want to grow my balances. And this one's not looking like one that would grow my portfolio. So 6 analysts do cover the stock, and analysts had price targets at $270, the most optimistic one at $7. Now, according to them, the revenue is going to grow single digit. And I would question that because, again, Uber, Waymo, soon to be Tesla, robotaxi, you're going to have a lot of alternatives to renting a car. And I think they're going to have struggles just being in the positive growth rate. They're going to lose money for the next 3 years. So interesting that they can put a value on a stock where it's just negative on cash, negative earnings per share. Most analysts were complete sellers. It would be super interesting to know exactly why Pershing Square is buying the stock. Because this one is super risky. Now, if it works, they're going to make out really, really well. They already have. If you look at the gain, I mean, they invested $46 million and are already sitting on a $58 million gain. Now, I don't think they're going to get out very quickly, but if they did, it'd be super genius, right? In a week's time, you made $58 billion. Wow. That's a pretty nice job if you can get it. But I think there might be a bunch of lawsuits if that happened, because that's maybe not allowed. I don't know that for a fact, by the way. It just seems wrong that if a big investor came in bid up the stock and then left, I think there might be something there. So that is interesting. It certainly was a punch in the arm to his portfolio. Let's see how that changes in the ranking overall for Ackman. So it should have improved his spot. Nope, he's still in 11th place. So it helped him, but I guess the dollar amount of that gain still doesn't compensate for some of the other dollar amounts. Yeah, these dollar amounts are big. If you look at Brookfield, just year to date, right? We're at April 19th. He's down 270 million on Brookfield, down 45 million on QSR. Chipotle down big, 20% year to date. He's down 299 million. Worst one is Nike, down 373 million. Wow, it's a lot of loss. That might be, no, that's not the biggest loss. Seaport would be, but from a dollar perspective, that certainly is. So when you see that gain of 58 million, it still doesn't come close to covering a lot of these losses year to date, unrecognized. So that's the update on Bill Ackman. And again, I'm not quite sure why Uber isn't being reported. And I wonder when he bought it. Let me do a quick Google search there and try to find out when. And if he bought it in the month of April, he wouldn't have to report it until the end of Q2's 13F filing. Now they began buying shares in early January. So let's take a look here. So they started buying in early January and have amassed a $2.3 billion stake. So why aren't these reports picking that up? I don't know. Let's pop it in there. Okay, so they have $30 million of shares. So this one, I'm going to just put a placeholder in there, but I'm going to go back after the stream and try to be more exact on the price that they bought it at. But let's take a look at where Uber's been trading. So they started buying in early January, and over the course of a month, they've accumulated a fair amount of the stocks. So let's say that they bought at $64.84, just as a placeholder. Then I'll come back and update that number. $64.84. So they're doing well with that stock, assuming it's somewhere near $64 a share, their acquisition cost. I'll go validate whenever I get some legitimate data. But that would move the needle for them. They'd be beating the S&P by just a little bit. And with Uber, it would move them up the ranks up to number 6. So go Bill Ackman. And that goes to show, in a market, especially like the one we're dealing with, some investors can't stomach the volatility. They just don't want to deal with it. It's just too stressful to make the big decisions um, that need to be made. But it's actually more important to be an active investor during this time, because if you're getting a discount offered on a stock, you can take advantage of it. In this case here, buying Uber, good idea. Buying Hertz, they created a really good rally in the stock. So overall, it's really improving that particular portfolio. I'll go back once I have time to really research if I can get a better report on what he paid for this share price, and then I can update this information, get more precise on the gain. But the other stocks are not doing all that hot. And frankly, a lot of stocks are not doing hot in 2025. So not a big surprise, but his portfolio did move quite a bit. Good job, Bill Ackman, improving your portfolio. So that was interesting. And let me try one more Google search to see if I could find. I'm going to go straight to the SEC website and see if I can find any kind of reporting that they are seeing. So okay, so what's being reported is that Bill Ackman revealed this trade on X, and it's estimated that he paid $75 a share. All right. So that's a little closer to the target. We'll update that. Update this. And it's still a win, but not quite as good. So, yeah, not much of a gain yet. We'll see. So that did kind of change the ranking real quick. So he's fallen back a few spaces. Sorry, Bill Ackman. It's been interesting to track, super investors. One, to understand what their investing strategy is, understand their portfolios, and then see which ones are doing well. And a couple of things that I get out of it is, we all know investing is difficult, but even really good investors that have had many good years, they have a tough year. Like this year's being tough on a lot of investors. Even Warren Buffett, if you look at his portfolio, not the Berkshire Hathaway stock. Everybody says, no, the Berk's stock is up. But if you look at the portfolio of stocks they own, just look at the performance of those stocks. It's down 10.5% year to date. If you look at Apple stock, shouldn't have to convince anybody. Apple stock's down big, more than 20%. So that's an example. But a lot of investors are struggling. So let's just keep our eye on the ball and keep making our portfolios better, keep getting better as investors, because even these super investors that have far more resources than we do to analyze companies, they struggle as well. So that is interesting. Bill Ackman's portfolio updated on the fly. And I'll try to validate the information even more later on. All right. So hopefully you found that interesting to take a look at that super investor shadow guy. Thanks for explaining that, shadow guy. All right, cool. All right, cool. Well, so on Netflix, just to kind of put a brief recap of a video I just produced, and you can get more details. This stock's really worked over the last couple of years, but I think it's overshot its true intrinsic value. Its intrinsic value is around $580 per share, and it exceeded that amount. Um, in 2024, middle of it. I sold out of the stock once it started exceeding that, and their intrinsic value hasn't changed a whole lot from the time I made a decision to sell Netflix at a big gain. And I think it's overpriced at the current time, but it's this type of stock that a lot of investors can really understand. We all understand Netflix. We're probably subscribers. But when you look at the cash flow of the company, it just doesn't have the intrinsic value equivalent to $416 billion. It falls short, and you can watch the video for details. And you look at the PE ratio of 46, that's a clue that this thing's expensive. If it's not growing like, tremendously, if you look at the last quarter, 12.5% growth. So it's not an incredible grower. It's just a grower, good sized company, but it has a lot of momentum and it continues to go up. And I think that at some point, this stock's really going to come down like it's done before. And then once the enthusiasm goes away, this stock really collapsed from 678 down to $180 a share. Wow, what a collapse. It was really painful for a lot of investors. And I'll wait for Netflix to be priced at a really good discount, or I just won't buy the stock again. I'll continue to subscribe to my Netflix, but I don't need to be a shareholder. I've got plenty of choices to buy good companies that are discounted right now. I don't have to stretch myself on Netflix. All right. Well, I covered the stocks that I wanted to cover. It looks like we don't have any requests out there. And it's good to connect with you guys. Again, I'll have a little bit of radio silence tomorrow where I'm going to be celebrating Easter with my family and we'll be unplugged. As we head out of this live stream and look to conclude, consider being a member of my channel. You can get the details if you go to the homepage of my channel. You click on the join and you can join at $10 a month, $25 a month, or $100 a month. And each member level will get you a certain level of perks, and you can get signed up. The perks are listed on the information within my channel, but here they are. I think one that's really gotten the most recent channel members, and we've had a nice increase in members, is that you get access to the tools I'm using, including the valuation model. You get access to that. You get an access to the library of valuations that I've completed in the last 30 days, and I update it every 30 days. So you can have that as a reference, just as an example of what I came up with on a valuation for a particular stock. So that's really been probably the more popular reasons why people are getting signed up and getting access to it. But you also get invited to member-only calls. There's member-only videos that I produce each week covering what I'm buying and selling. And I think, I hope that members get value out of that as well. So consider it. It'd be great to have you as a member. And of course, on live streams, you can ask for a stock to be reviewed. All right. So yeah, Anthony, I appreciate you joining the live stream. Thanks for tuning in. Trevor, I appreciate the positive comment. Thank you so much. All right, everyone. Well, enjoy the rest of your Saturday. Enjoy your weekend, and good luck with your investments. Thanks for tuning in. We'll see you.